Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting the Asian session live market analysis for this week, and we will be doing the analysis on the expected market moves for this week as a forecast, and also the mathematically derived levels in which the currencies are expected to swing. And also we'll do the market trading technique and find out how exactly we'll be able to make use of the market moves as great trading opportunities. Now we have come to that new month. So the month of November. So the forecast will be for 3rd to 7th of November. That is the first week of November. And today we are on 3rd November. Between 5 and 5:30 GMT, I'll try to explain to you all these derivations. So first of all, we will see the derived forecast. So before going to that of the derived forecast, I like to briefly mention about what had happened on last week, Friday. That is a month-end time. So on the month end, as explained in the previous webinar, that they made the quick drop in the case of Euro and GBP during that of the Japanese and the European session. And when all the traders found that the market is going to make a further downward move and it might be non-stoppable, and then probably they liquidated the long positions and turned short, the players firmed up during the US session and induced them to do the short covering. So if a visible drop has happened, afterwards if we try to do sell and buy trade, we'll be trapped. And similarly, when the visible rise has happened, and after that we try to do a buy and sell trade, we'll be trapped. And unfortunately, you come across in the market many of the analysts, after finding difficulty with regard to identifying the trend of the market, they invariably suggest the breakout trades. And the breakout trades mean that once the higher level is breached and afterwards the market goes up, then probably that resistance turns support. So they recommend that you can do buy and sell trade after the rise. Similarly, sell and buy trade after the drop. But everybody is afraid to give a call that after the full rise, why not you do good sell and buy trade? And similarly, after a good drop, why not you do buy and sell trade? And last week, I was recommending sell and buy trade in the case of Euro and GBP, and in the case of denominator currencies, buy and sell trade, and especially USD and GBP. And USD yen, they quickly gained the levels from that of 109, 110 to 111 and 112, then further upward to 140 region on Friday. And today they have gained another 30-40 pips. And so we know very well that they use the GBP and USD yen to change the market sentiment. To change the market sentiment on the downside, they can quickly drop GBP and automatically Euro will also drop. Similarly, when Euro and GBP are very strong, like other day, they took it to 1.27 area in the case of Euro and 1.6150 in the case of GBP, and quickly gained the levels in the case of USD in order to make an upward extended stop. And in the case of yen crosses, immediately Euro and GBP started making the slide. So they use such spikes and the moves, quick moves, in order to stun the traders. So the stunned traders immediately say that it is a market surprise. Everybody was surprised. That's what they used to say. But, as our trading understanding is that market can give such surprises. So expect the unexpected. That is why I was not recommending sell and buy trade in the case of USDN and USD CHF. Instead, I was requesting you to take a buy and sell trade once there is a good drop near the low. When the low has not been breached for more than 30 minutes to 2 hours, you can take a buy position and use the hedge order to limit the risk. Now you can understand why such trading ideas are being given. It is not that I'm afraid of doing a sell and buy trade near that of the low or buy and sell trade near that of the high. Because, see, it is very easy to say such trades and simply say that keep stop and trade. But there are practical difficulties as far as the traders are concerned. Then invariably after the buy, when the market goes up, the trader relax and he does not take the precautions of keeping stop at entry. And what happens? Suddenly the market reverses. He is caught unaware. And afterwards, you find it extremely difficult to exit out of that because they continue to make that drop. So aiming 30-40 pips as a profit, you have to see the downside risk, how much they can drop. And if you are using the hedging and try to keep stop at entry, it's fine. But predominant of the traders simply say that the hedging facility is not available in the platform, or even if I use the hedging, if it is hedged, I do not know how to come out of that. Even though they can learn how to come out of the hedge and they develop the rigidity and they do not want to learn that. And that is the mindset, because we cannot help it. Such people who wanted the market to move as per their expectations, nothing more than that. As they envisage, as per their understanding, they want the market to move. If it goes against, they will yell at the market, yell at the computer, and yell at the people associated, and simply probably in chats and blogs and things like that, they will show their anger and keep quiet. And nothing happens to the world other than the drop in the equity of such traders. So they need to understand that market means surprise, and market can continue to give the surprise. That is why we have to always keep in mind, expect the unexpected and try to trade with caution. And especially, I explained many times that during the month end and the month beginning time, the players are expected to make big trend reversal moves. They are all called the monthly trend reversal moves. So if you understand all those concepts and understand how the players make the moves in the market, then you will never be surprised. And you will always try to make use of that as a great opportunity of trading. Imagine somebody has taken a sell and used the hedge order in the case of USDN, and suddenly USDN spikes up. And in the first spike itself, for more than 30 minutes, the buy will be making profit around 110 if the hedge is kept. And the lower level sell can be closed with a loss. And when the market continues to gain further upward, what happens? You are in the net profit position. So that way, a loss making position, you can turn it into a profit making trade. So we need to understand for that, because the players also try to do similar moves and try to earn money from that of the market. So in the money making game, you have to find out that the trend, what they are setting it for the each session is vital. So if you try to follow the session-wise trends, then you will find that trading becomes much easier. So keep that in mind and try to follow my forecast and also the trading strategies so that you will be able to consistently earn money from that of the market. Now, before going into the of the expected market moves for this week, here afterwards, I thought that I can explain to you the prime predictions. That is, what could be the market surprise? So if I give you beforehand, probably you will be prepared for that so that there won't be any surprise. And as a result, you will be able to control your emotions and try to make money from the market. So we are into that of the new month, namely the month of November. So the month beginning time, you'll come across the volatile moves. So always keep in mind during that of the month beginning and the month end time, the players make the monthly trend reversal moves. The trend reversal moves are nothing but the up and down move on the either side, and thereby they try to either exit out of the holding positions at the extreme levels, or they try to accumulate as much positions as possible during that start of the month. So now you find that Euro and GBP are near that of the low set for the season. So obviously, when they are near that of the low and we are coming closer to that of the year end, we know very well they are trying to accumulate the buy positions here. So they are doing the lower level consolidation with frequent downward stopping. So during start of the day, you would have noticed that they made a very quick drop in the case of Euro and GBP, and then subsequently gained the levels, and they are not cutting the new low. So whatever the low they are set, they are not breached that low. That indicates they make an extended downward stop and then take it up. So immediately players develop the bearish feel and try to sell near that of the high, aiming for about 20-30 pips dip and trying to book profit. So they may do 2-3 times during such downward stop and finally when they commit more position thinking that there is going to be a big drop in the case of Euro and GBP, they take more positions out of greed and also overconfidence, and suddenly they will reverse the market and take it up one-sided like how they had done it in the case of USD. Such traders, if they fail to keep stop and also fail to keep hedging order, will vulnerably get trapped and then lose all the money and much more what they have earned during the small sell and buy trade after the drop. This is what happens every time. And in spite of that, the traders don't realize it. And also the analysts also they don't realize how dangerously they are giving the calls, and instead they say try to do this and the market is going to be downward. Probably they imagine all the lower levels for the season like 1.19 in the case of Euro or 1.16, the previous lows what they have set multi-years, and also in the case of GBP 1.58, 57, 56 and things like that, and somebody has recommended even 1.53 could be seen. So they give such levels immediately, the traders turn bearish and they don't mind doing sell and buy trade. So without their knowledge, the analyst, instead of advising the traders to earn money from that other market, advise them to lose the money. And there is a protective clause, namely disclaimer, and with which they try to say the trend is your friend all the time. And whenever the trending move happens from second week, their calls will be true, and automatically everybody will think that okay, only during month and he was not in a position to give the call. Subsequently, the calls are coming true. That is what the people realize. But ultimately, what is most important with regard to the market prediction is the trend reversal times and also the trend reversal levels. So for that, what we need to understand, the players just like that cannot make any big drop or a big rise. They want certain triggers to happen in the market. So we do come across now the lower level consolidation with a downward stop and move. And the triggers in this week are going to be the BOE interest rate decision and asset purchase facilities, and on 6th Thursday around 12 GMT. Then the ECB interest rate decision by 12:45 GMT, and 13:30 GMT, the ECB press conference. So the press conference is by 13:30 GMT. So they are the trigger times. And on 7th, Friday, the non-farm payroll is there by 13:30 GMT. And now on, it will be 13:30 GMT till March, because in US also the daylight saving system is off from yesterday. So here afterwards, the Europeans US session will start by 14:30 GMT. So 1 hour before, the released non-farm payroll will happen. Earlier, when it was 13:30 GMT, 12:30 GMT, the non-farm payroll was released. Now it will be 13:30 GMT, the non-farm payroll will be released on the first Friday, and you'll come across the market is going to bring a surprise. What is that? Euro and GBP to make volatile moves and rise quickly for the above mentioned events. For all these events, you'll come across Euro and GBP going to gain the levels. Before that, they will try to create all bearish feel till on Wednesday Japanese session. Okay, the expected market moves for this week. The first week, the monthly trend reversal move is expected between 3rd and 7th of November. So till Wednesday, that is 5th of November, the start of the Japanese session, they will try to create uncertainty. And also during that of the US session on Wednesday, they will try to make either way moves and swing, wide range swings, and induce the traders to feel bearish and bullish alternatively. And afterwards, they are expected to make the firm up move. Most likely, it will be in the form of a rise from 6th. During that of the BOE and ECB interest rate decision, they will try to make the quick upward move on the slide, giving the impression that the market is going to drop, but they will make the swing and rise during the US session. And then again on Wednesday, Friday, they are expected to make the swing and firm up move on during that of the Japanese session and try to make the slide after that of the non-farm payroll. And people might think that, okay, Euro and GBP, we are going to collapse, but they will make very quick dip and create uncertainty and start making a big upward spike. And then afterwards, from the 10th to the 14th, you know that it is from second week of the month, the trending move is expected to happen. And on the first day, you will come across the week beginning false move, followed by that of the trending move in that particular week. From here, you will come across till next year beginning, the market will be upward. That is, Euro and GBP will make upward move, and also we'll come across USDN and USD CHF will also make upward move. That's what you come across now, and you find that the denominator currencies gain quickly. And the first one to make is the upward shift in trading zone is USD So from there they will make one more drop in order to trigger Euro and GBP to gain the levels quickly. And immediately people will think that, okay, I could have just waited with my sell positions in the case of USD so that I would have made a profit. But after what? After about 7-8 days. So they will do the high level consolidation and make an upward stop and in the middle level range and the middle level swings. And then subsequently they will make one more downward move in order to trigger Euro and GBP to go upward. And this time USD CHF will not make much drop. Instead, it will continue to gain the levels. So you know that even though USDN, USD CHF, and USD CAD are all denominator currencies, when you look into that of the net changes on a daily basis, you'll find sometimes the denominator currencies show variations with regard to the net changes. And also you know that Euro and GBP show variations with regard to the net changes in order to handle the European crosses. And with regard to the yen, also sometimes yen makes the contrarian move of rising along with that of Euro and GBP, dropping along with that of Euro and GBP as a contrarian move. So this time you will find the majors are expected to make very big move, and the denominator currency USD CAD and Australian dollar are expected to make the wide range swings. So they will be making the wide range swings, and so you can follow that and try to trade. And they are not going to participate in the upward rally of Euro and GBP. At that time, they will be making only wide range swings. But Euro, GBP, USD and USD CHF will continue to make an upward move, As a result, you will find the US dollar index will be always kept at the higher level, but euro and GBP will continue to gain, and that will be reducing the US dollar index on the downside. But USD and USD CHF will complement. As a result, US dollar index will be on the higher side. So people will be really confused what is happening in the market. But the players are here to continue to give the surprise to the traders and earn from their distressed trade. So if you lose your patience and become distressed, and nobody can save you from the losses. These are all the initial lows and the highs set today. So euro formed 1.2441 and the high was 1.2515, and GBP 1.5927 and 1.5985. Just because euro has come below that of 1.25, the psychological level, people might think that, okay, we can buy, but it might go down further. Then probably once the strong support is seen, then we'll try to buy it. That's what the feel they will try to develop it. And you know that during such downward stoppment, always they will try to keep the market closer to the other high, but not breach the high. So that the traders think that, okay, the market might go up and try to take a buy, but afterwards they will make 120-30 pips downward stop, and the traders will cut the position and the stop might be hit and develop the bearish feel. Okay, next rise I should sell. So that is how they develop the feel, turn from bullish to bearish, and then the players can trap them. So it is a question of changing the psychological or the mental makeup of the traders and make them uncertain, make them surprised, and then continue to earn from that of the disgusted traders. So the traders become disgusted once they do not understand what is going to be the trend. It is not only the traders, even the analysts become disgusted, and sometimes they become afraid and spread the fear to all other traders by making a loud noise and making various explanations over the media. And when they shout, and it'll appear as if soon after his speech, the analyst's speech, euro could go to 1.19. That is how it will appear. And you know that the vociferous talk and the fear-creating talk is part of the media, because they have to trigger the emotions of the traders. Only then the people will glue to their idiot box. So that is why they try to make such moves and make it more emotional. But as a trader, we have to control emotions and we have to perceive the right thing in the market and not relate it to that of the previous occasions. So when you relate euro to that of 1.25 and 1.26 or 1.28 of last week, you'll find the market is in the downtrend. And when you just refer it later on, once they set the low and not breach the low for more than 30 minutes to 2 hours, you will find, okay, it's a buy opportunity. So it is a question of perception. So what we perceive apparently is not true using the chart, because invariably in the chart, you can connect the market to a number of days, 200 days moving average, or you can take the multi-year lows and draw the line from there. But here, what we have to understand is the traders who are holding the positions are vital. Those who are liquidating the positions, they may hesitate entering into the market. Only those who are holding positions, they might come for a distress liquidation of the long position or distress short covering of the short positions. But that such traders are position traders, those who go in for the currency conversion trades. They don't become emotionally attached to the market. Suppose somebody is holding in the currency in the market, euro around 1.42 area, it was converted from US dollar to euro. He will not come and liquidate euro position now because there is no leverage involved in that. He can simply hold euro until such time euro comes to 1.42. So this is the mistake of the technical analysis. Technical analysis simply considered all traders equal. And then it says that, okay, there are a lot of higher level long builds up in the market. So such longs are to be liquidated. And that is why we derive the supply and demand. But they are not going to supply it just like that in big loss. Instead, they will wait for the market to come up to that level and then try to liquidate or try to liquidate with a profit. So the currency conversion traders are similar to that of the delivery based trading, what you come across in the case of stock market. Somebody has taken the delivery of the stocks. He will not liquidate the position in loss. He can hold for n number of years. So he will not accept the loss. Those who go in for the leverage trading out of market compulsion, he has to liquidate the positions. Otherwise, the usable margin will erode when the market goes against. So only such intraday traders are going to decide or going to make some distress trades, not other traders. And especially those who go in for the derivative trading, like the options and futures, when they have taken the leverage position, there are stops for it. And they take only limited risk. And they know pretty well most of the time that stops will be hit. But still, they make only a small investment like a speculation, probably invest about $100, $200 and expect about $5,000 profit. Otherwise, lose $200. That sort of decisions they make and commit positions. So they are not going to come for a distress long liquidation or the short covering. So only the intraday traders who are going for the leverage trading are going to be affected. That is why you find the official trading platforms, they offer only 1:50, 1:100 leverage. Thereby, you are forced to take very less position so that the usable margin will not erode drastically. But those unrecognized trading platform, they offer 1:200, 1:400, 1:500, 1:1000 and things like that leverage in order to kill you. You think that okay, they are doing much favor for you and try to take positions in that. When the market goes against, they will simply close all your position and grab the money. And especially, they might be market makers. So keep in mind that many of the people in the forex market, they will talk to you as if they are going to extend enormous help to you without expecting anything back. But understand the cunningness behind it before accepting any of their recommendations, including me. Because, see, some people might think that, okay, I am doing all these things in order to attract traders. Not like that. I have the intention to help the traders. That is why I don't even take the email address of the clients or those who are visiting for this. I don't even communicate with them unless and otherwise the traders ask me. And I don't compel anybody. I don't do any marketing for the simple reason I do not want the traders to be influenced when they are in uncertainty. It is a very it's a sin, I can say, that try to trap the innocent and try to exploit them. So, you know, the market reading, that what we do is when the market is closer to that of the high and not breach the high for more than 30 minutes, we take a sell. When the market is near the low and not breach the low for more than 30 minutes, we try to do a buy and sell trade and keep 30 pips hedge order to limit the risk. And once a position makes 25 pips profit, we keep stop at entry and remove the hedge order. Thereby, we eliminate the risk to nil. Then exit, we keep 45 and 75 pips limits depending upon the market momentum. If the momentum is good, if the spread is more, see, like now you find that net change is 42, 22, etc., 62, then we can keep about 75 pips limit. Thereby, we'll be able to see that the limit is filled. Otherwise, the trailing stop is filled in the market. Now, since in US, the daylight saving system is off along with that of Europe, Now you find all are using the standard normal time. So already we have seen that Japanese session is extended by 30 minutes 0030 to 7:30 GMT. 7:38 will be the gap time. 8 to 14 GMT. Now 1 hour is lost, or 1 hour is gained during that of the European session. So 8 to 14 will be the European session. 14 to 14:30 will be the gap time. Then 14:30 the US session starts, and 21:30 it gets over instead of 20:30. Then 21:30 to 0030 will be the gap time before the next day. So note down the early, mid, and the late sessions timings so that try to take positions in the case of majors during that of the early and the late sessions, and trade the crosses during that of the mid sessions. So that way you can understand the change in the session timings because the daylight saving system is switched off. Normal timing is being used now on till March 2015. It's a winter time. So I will try to answer to the questions which are asked here. Okay. Ahmed has got a question. What do you suggest? What leverage we should have? See, the leverage of 50 to 100 is fine. More than that is really risky. It will allow, because when they increase the leverage, automatically the margin used for taking the positions will be very minimal. So when there is only minimal money blocked for taking the position, the rest of the money, the free margin, will give that impression for you. You can take more position, you can take more position. And once you take about 4-5 positions, and when the market goes against in a big way by Wednesday, Thursday, Friday, you find that the usable margin is eroded by all the positions simultaneously, and the margin call fear comes in. So that is purposely done in order to make the traders distress. So this is called structuring the financial product. So all the experts going for structuring of the financial product in order to see how the traders can be trapped. Then Gregor has got a question. USDN finally on the rise now, or some downward stoppant like forecasted or still expected? Yes. USDN, you know that it has made a quick upward move and changed the market sentiment. And immediately everybody become bearish in the case of Euro and GBP. Similarly, USDN, they will make one quick downward stop and move before going to that further upward shift in trading zone. Now it is come to that of the middle level. Now from that of the lower level, they come to the middle level. Then they have higher levels of consolidation with frequent upward stop and moves. So for that, what they will do after doing the middle level consolidation with the either way stop ends, they will make one extended downward stop and make upward move straight, breach 112.17 and go higher, higher, higher to 116 and make the swings higher. Higher level consolidation with frequent upward stop end. That is how the shift in trading zone happen. So the extended downward stop end is a great buy opportunity with regard to USD-yen. Okay. The next question. What do you suggest leverage I have seen? I have USD-yen sell position at 111. Should I liquidate it? You can probably, if the equity permits, don't add for the sell and you can wait. Otherwise, when there is downward stop and below that of 112, you try to close it and wait for an extended downward stop and try to take buy position and earn back the last money. And when they are holding high, making upward stop and don't liquidate. That means you are liquidating out of fear, but your margin has to take a decision on that. But upside is limited. Essentially, so they will do extended downward stopping for majors a few more times. Sir, I'll looking to buy. No, as far as the majors, Euro and GBP are concerned, they will only do the lower level consolidation with a downward stopping. So they may just trade below the 1.25 or 1.2550 and make a downward stop and like going to 1.2441. 1.2441 is nothing but a low set below that of the psychological level 1.2450, because on Friday many would have taken a buy position near the low 1.25 and kept the stop below 1.2450, and so they would have seen that a lot of stops below, so they made one downward stop and then filled and earned money out of that. And of course, they will hold and make one upward stop, and so that a lot of traders will come for a breakout trade. And then again, during US session, they will make one downward move and they will liquidate and turn short after the drop. Then again, they will firm up. They will make the traders foolish. That's all, nothing more than that. They will induce them to do sell and buy trade after the drop, buy and sell trade after the rise. And the traders, when they start doing irrelevant trading of that nature, they simply satisfy themselves telling that this technical analysis says that, so that is why I've taken it, or this analysis says that. But the gut feeling will be totally ignored. Because in trading, it is not only the analysis matter much, also the common sense. So when they are making a downward stop in the case of Euro and GBP around 1.2450 or 1.59 area, you try to grab the positions and use the hedge order to limit the risk. Always quick moves are false move. You know that whenever they make such quick downward move, you buy. They are making slow downward move. Understand it is an intentional move. They wanted to go further downward, and later on you can buy. Then Aditya, do you expect another extended stop and for Euro and GBP on the downside before? They could do that if a lot of traders turn long. Otherwise, they will simply hold and continue to gain the levels. Last time they came to 1.25, and the next day, Monday onwards, they started gaining the levels and went up to 1.28. And now they come back below the 1.25. So anybody will feel that the market has become bearish because it has come below that of the earlier low set. In the chart, it will show a clear downward move. So the players will hold here and see whether the traders are selling. Otherwise, if they are not selling, then they will gain further up, small 25 pips or so, and expect them to sell. If more traders sell, then they will gain. If more traders turn long, then they will drop. So they will not just like that allow the traders to make profit. Best way is to, whenever there is a quick downward move, buy. Whenever there is a quick upward move, sell. When the move is slow, wait for the intentional move to get completed and then try to commit positions. So extended move, stop and false move are all quick moves. And during that, do only contrarian trades. Then, will Australian dollar expected to drop big this month? No, sir. Probably 0.87 could be the low in the case of Australian dollar. Don't expect too much on the downside. Then Chowkiat. This week we should do more buy and sell trade start Wednesday. Yes, you are right, sir. Then Ramiz. Are we still having a look at to note the market net change? Yes, 2:30 and 3:30 GMT. There is no change with regard to the noting down the initial lows and the highs because there is no daylight saving system involved in that during this time frame. Even though in Australia it is there, but the players continue to use it, the standard 2:30, 3:30. What about New Zealand trend? New Zealand dollar is also expected to make swing and rise move this week, but it will be wide range swing, not one-sided rise. Okay. EVSEC. Regarding equities, central banks are doing printing. So maybe expect safe buying for a year or two. Okay, as far as long-term investments are concerned with the stock market are going to make a decimal drop, and they are making high-level consolidation with upward stop and now. So it will continue till next year. Afterwards, like 2008, 2009, we'll come across a very big drop in the case of stock market. And the risk with regard to stock market is if you do the delivery based and whatever the momentum stocks of this year, you try to take the delivery of it and wait for the market to go up. Okay, fine. If you don't exit, if you don't trade them and become possessive of them, after the drop, you think that, okay, they will again rise. But next time they will pick up another 10 stocks and rise the market during the next season. And the stocks what you have purchased may not rise at all. So always keep in mind the players in the stock market have got a better options of picking each time about 5 to 10 stocks and rig them, not all the stocks. And in the stock market, the basic idea of rigging the market is mainly to facilitate the promoters to exit out of the stocks and make billions and billions of money. And overnight, they earn so much because of the valuations they create artificially. So afterwards, once the promoters exit out of that operators may not expect anything from the promoters as a big chunk. So they will lose it or they will just lose interest in the stock and pick up another 10 stocks and try to rig them. So understand the intricacies involved in the stock market and then try to take delivery based trading. Don't think that any type trading is safe. But in the currency market, currency conversion trade using different trading platform, different trading account, the investment account might be safe. That is, you can have Euro, GBP, USDN, and USD CHF account or Canadian dollar and Australian dollar accounts under the same head and try to convert the currency from one account to another account. Probably the charges might be high, but still, after about 1,000 pips of gain or drop, you can just convert it, the valuation will go up. And after doing about 4-5 conversions, you'll find the money multiplies, even though the bank is not giving any interest for you, probably a meager interest they might give, but you'll be able to consistently earn money from the market. But instead, if you just invest in speculation and if you don't discipline yourself using the stop at the hedge order, then you'll see that usable margin erodes slowly. So they don't allow the traders just like that make profit. Keep that in mind. So you have to be doubly cautious. Okay, Ramesh, when you refer to quick move as we talking about 15 to 25 pips or 45. Okay, quick moves. You know that 15 to 25 will be stop ends above that of the initial high, above that of the or below that of the initial low. That will be stop and move. And extended move again can be for 25 to 55 pips. So there is no definition as such many pips with regard to the quick moves. But any quick move, they only make three such quick moves. If you listen to my trading system, I explained in detail how the quick moves happen. And they are being recorded and they are listed under my profile in fxtrade.net. You just see there, you'll be able to find how they make three such moves and stop cutting the low. And afterwards, for 30 minutes, they don't cut the low. Then they will reverse the market. At that time, you can take the buy position. Then Will, can I explain the hedging strategy for the intentional move? Uh, the right place to ask will be during my Tracking the Forex Market Together webinar. And this month, again, probably in a short period, I will give the webinar. At that time, you kindly ask me. I'll also explain that trading strategy. For Tracking the Forex Market Together webinar, I'll give more importance to that of the strategies, trading strategies. And in Asian Session Live Market, I give importance to that of the forecast and market trading. So that you get learn different informations of the trading system. And Ramesh, all the quick moves reflected on the 15 minutes or linked to 1 hour chart. So if you look into the chart and it will be just normalized, sir, you have to view only the tick chart. Only then that will give the true sense of quick moves. But you will find tick chart is unwieldy to understand. So you use the price action. Look into the live market code page. You can see suddenly the drops happen in the levels. Suddenly the rise happens in the levels. And that the chart will be a lagging indicator. And Ramesh. Okay, I explained it. Okay, no more questions. So I take this opportunity to thank FX Street for the facilities provided and for recording the webinar and keep it available for the traders who come later on and listen to the webinar. And I'll come back on 6th of November and give the review of the forecast I have given it. And that will be Thursday. On that day, you'll come across the interest rate decisions of BOE and ECB will be expected. So we'll come across very interesting things happening in the market. I'll try to give the forecast for that live so that you'll be able to really make profit out of your trades. So thank you one and all. See you on Thursday. Wish you happy trading. Keep in mind it is first week of November, so market is expected to become volatile. So when it is sluggish, don't enter during the early and the late sessions. When they make quick moves, try to take contrary trades. Thank you. See you on Thursday.